All right, let's just jump right in. We are standing on the edge of a massive economic shift. And I'm not just talking about shiny new tech or faster computers. No, the very foundation, the bedrock of how we measure value, how we even understand profit and loss is being totally shaken up by artificial intelligence.
And look, that's not just some dramatic tagline. The rise of AI isn't just tweaking how business is run. It's fundamentally rewriting the definition of what economic value even is. So what we're about to get into here, it's more than just a chat. Think of it as a roadmap, maybe even a survival guide for what's coming.
Okay, so why the crisis? What's the big deal? Well, it's because the rule book we've been using for, centuries? It was written for a completely different game, a game that's quickly disappearing. This isn't just a new chapter, it's a whole new book. Just look at this contrast. On one hand, you've got the old world. Traditional accounting, it loves things you can physically touch, right? Factories, inventory, stuff that's tangible, predictable, and frankly, kind of slow. But then you look at the AI reality. It's the complete opposite. It's all about the intangible, the autonomous, the real time. These two worlds, they just don't speak the same language.
And because they don't speak the same language, we end up with this massive blind spot. And what's lurking in that blind spot? An explosion of what experts are calling dark assets. This is stuff that's insanely valuable. But our current systems, they literally can't even see it, let alone measure it.
And then there's the speed. My gosh, the speed. An AI can make millions of valuable decisions in the time it takes you to prepare a quarterly report. The sheer velocity and independence of AI makes those old reporting cycles seem like a joke. We need to know what's happening now, not 3 months from now.
So this really brings us to the heart of the matter, doesn't it? If all this new value is invisible, if it's a dark asset, how on earth do you even begin to put a number on it? This is the central question for the entire post-AI economy. Seriously, think about it for a second. How do you put a price tag on an algorithm that's constantly learning and getting smarter all by itself? How do you log an asset on a balance sheet when you can't see it or touch it, but it's raking in millions in real-world profit?
Okay, so let's get a really clear definition here. When we say dark asset, what are we actually talking about? It's basically all that juicy, intangible value cooked up by AI. We're talking about the algorithms themselves, the unique data that fuels them, and even the brand new intellectual property they create, all of which is completely invisible to standard accounting.
Let me give you some concrete examples. Imagine an AI that designs a new life-saving drug and then generates the patent for it, all on its own. Or what about that secret sauce, that proprietary dataset that makes one company's AI totally unbeatable? Or an algorithm that's quietly saving a company millions by making its supply chain hyper-efficient. These aren't science fiction. They are happening right now, and they are all incredibly valuable dark assets.
So what this all boils down to is a really profound shift in thinking. Data isn't just stuff we collect anymore. It's not just a tool. It has to become a real, quantifiable asset, sitting right there on the balance sheet next to the company headquarters and the delivery trucks.
But it's a two-sided coin. For every new type of asset, you get a whole new category of risk. So it's not all about the upside. We have to talk about the liabilities AI introduces. And believe me, it is a whole new, wild landscape. Just let this one sink in. An entire fleet of self-driving trucks, all run by one central AI, causes a 100-car pileup. Who pays? Who's liable? The company that owns the trucks? The person who wrote the code? Can you sue the AI itself? These aren't just hypotheticals anymore, and the legal and financial mess is, well, it's completely uncharted territory.
So the very definition of risk is shifting under our feet. We used to lose sleep over things like human error or someone stealing a laptop. Now, the things that should keep us up at night are algorithmic bias, an AI accidentally creating a discriminatory process, or a hacker getting inside the AI's brain and poisoning its logic from the inside out.
And of course, the whole financial industry has to play catch-up. We're going to need brand new types of insurance, totally new financial products, just to build a safety net for these kinds of AI-specific risks. The old policies just won't cut it.
Okay, so we've hit on assets and we've hit on risks. But let's talk about the big one, profit. When an AI is the main engine driving a company's success, how do you slice that pie? Who or what actually gets the credit?
Today, it's pretty straightforward, right? We look at the profits and we can say, okay, this much came from our amazing team, this chunk from our tech investments, and so on. It's a picture we all recognize.
But now, look at this. All of a sudden, a massive chunk of that pie is just labeled AI contribution. This doesn't just tweak the model, it blows it up. And it forces us to ask some really tough questions about where value actually comes from and how it should be distributed.
And here's why it's so tricky. An AI isn't just doing one thing. It's over here saving the company a fortune by making things more efficient, and at the exact same time, it's over there creating brand new ways to make money. The lines get so blurry that trying to pinpoint its exact contribution with our old tools is, well, pretty much impossible.
And this is where things get really wild and forward-thinking. If AI is going to be this incredible engine for creating wealth, do we need to invent totally new systems to share that wealth? Are we going to see things like, I don't know, AI dividends paid out to people? It's a huge societal question.
So, after hearing all this, if you're in finance or accounting, you're probably thinking, am I out of a job? And the answer is a resounding no. This is not about extinction. It's about evolution. The role is shifting from someone who just keeps score to being the strategic architect of this new economy.
So what's the game plan? Well, there's a clear path forward. Step 1, we have to invent the new rules, the new frameworks for measuring all this stuff. Step 2, it's not just about crunching numbers anymore, it's about mastering data and ethics. And step 3, financial pros can't sit on the sidelines. They have to get in the game and lead this transformation.
And that means you're going to need a new toolkit. Forget just knowing about ledgers and compliance. The new must-have skills, we're talking data science, advanced analytics, a real grasp of AI ethics and governance, and maybe the most important one of all, a commitment to continuous, lifelong learning.